If you've ever wondered what really happens when you enroll in a 401k, today's episode pulls back the curtain. Behind that simple checkbox on your HR form lies a complex system, a mix of tax laws, financial choices, and administrative teamwork, all working together to help you build your retirement future. Let's break it down piece by piece. The core of a 401k. Pre-tax contributions. First, the name 401k comes from a specific section of the tax code, and it's that code that allows employees to set aside part of their income before taxes are taken out. That means every dollar you contribute to your 401k plan lowers your taxable income today, while building a retirement fund for tomorrow. But it doesn't stop there. Some plans also allow you to make after-tax contributions like Roth 401k options, where you pay taxes now so you can withdraw both contributions and earnings tax-free in retirement. It's all about choosing what's best for your current and future financial picture. Cash or deferred arrangement, also known as CODA Every 401k plan, operates on something called a cash or deferred arrangement, or CODA. Here's how it works. You have a choice. Take your full pay in cash today, or defer a portion of it into your retirement account. That's why these contributions are sometimes called elective deferrals, because you choose whether or not to participate. And no, your employer can't force you to contribute. The power is entirely in your hands. The machinery behind the planet may seem simple on your end, a few clicks, a percentage selected. But on the back end, a network of roles keeps the plan running smoothly. Let's walk through who does what. Plan. Administrators are usually your employer or a designated sponsor. They're responsible for big-picture decisions, hiring experts, managing eligibility, updating the plan, and overseeing compliance. Record keepers handle the numbers, keeping track of contributions, calculating balances, running reports, and preparing statements. Service center representatives are the voices on the other end of the line, the ones answering your 401k questions when you call in. Benefits. Services teams operate behind the scenes, scanning documents, processing requests, and ensuring the data stays clean. Attorneys draft plan documents based on what the employer wants. They don't make the rules, but they make sure the rules are followed. Accountants check the financial health of the plan, making sure everything adds up, though they typically don't offer personal financial advice. Actuaries, mostly used for other plan types, may step in to determine funding obligations or calculate benefits if needed. Trustees and custodians are in charge of the money itself. They track it, invest it, and follow instructions for how and when it's paid out. And of course, the IRS and Department of Labor oversee the whole system, enforcing rules and reviewing annual filings from plan administrators. That's a lot of moving parts, all designed to protect your future. Filing a claim if something goes wrong. Sometimes things don't go smoothly. Maybe there's a question about how much you're owed or whether you're eligible for a distribution. That's where the claims process comes in. Here's what federal law requires. Once you file a claim, the plan has up to 90 days to decide, or 180 days if they need more time, but they must let you know. If your claim is denied, they have to explain why and tell you how to appeal. You'll then have 60 days to request a full review. The plan has another 60 days to make a decision with a possible extension. Again, they must notify you either way Tanumad approved or denied. And if the appeal is denied, they must also inform you about your right to take the matter to court. So while it may look like just a deduction from your paycheck, your 401k is powered by a detailed system. One that blends tax rules, financial planning, technology, and people, all aimed at helping you retire with confidence. Whether you're just getting started or already investing regularly, knowing how your plan works gives you the insight to make smarter decisions and advocate for your financial well-being. Next up, we'll break down how much you can contribute to a 401k, what happens if you contribute too much, and why the timing of your contributions matters. Stick around. Your future self will thank you.